Are you ready for the big pump? Institutions are really jumping in this time. You might be tired of hearing similar rumors, but this time it's different. So guys, please hear me out this time and you won't regret it. When institutions are getting involved, it often signals the arrival of a trend, and trend means skyrocketing price and money. I know you don't want to miss out on this opportunity. So guys, listen carefully. I will explain why it is so important to you, to me, and to everybody. As you probably know, SEC recently sued Coinbase, and it didn't take long for traditional financial institutions to join in. Are they running into the crypto realm despite the risks? Or do they have insider information and are taking advantage of the situation to buy low? What's up y'all, it's your girl Tommy. Welcome back to my channel. Traditional institutions have been making continuous moves lately. Also, they're called traditional, but don't let the word traditional blind you. Traditional finance is loaded with money. How rich, you ask? Well, let's take Apple for example, with a market value of 2.96 trillion, or Google with a market value of 1.5 trillion. Those are just market values of just one single company. Now, do you know the total market value of the entire cryptocurrency market? It is only 1.18 trillion. So now you can see the vast difference, right? Although the cryptocurrency market is relatively small compared to that, being small also has its advantages. Think about it this way, if even a small portion of the money from traditional finance enters the crypto market, the overall market value of crypto will pump, leading to substantial gains. But before we dive deep, please don't forget to subscribe and slap the like button. Your support means the world to me. Alright, let's start by shifting our focus to Asia, where HSBC has undergone a major shift in its stance on cryptocurrencies. In 2021, they maintained a reserve attitude towards Bitcoin, starting that they didn't consider Bitcoin as an asset and had no interest in offering cryptocurrency services to their clients. But guess what? They have now started allowing customers to trade Bitcoin and ETF funds. Currently, HSBC offers 3 future ETF trading options. Over the past 2 years, they have gone from denial to openness. But first, let's clarify the difference between futures and spot ETFs. It is like the difference between buying groceries and buying grocery coupons. Future ETFs are like buying a coupon that you can't immediately exchange for groceries. You have to wait until the contract expires. Moreover, when the contract is close to expiration, you have to sell the old coupon and buy a new one, which requires some additional costs. Spot ETFs, on the other hand, are different. It is like buying groceries directly and you own the actual goods. For example, the Bitcoin spot ETF applied by BlackRock allows you to directly own Bitcoin, just like owning other stocks without worrying about changing contracts. The emergence of spot ETF is crucial because it allows traditional financial institutions to participate, bring more legitimacy and trust to Bitcoin. This enables more people to invest in Bitcoin and boost the development of the Bitcoin market. Traditional finance has made a significant move in the crypto market. Companies like BlackRock and Fidelity have applied for Bitcoin spot ETFs, and you might have seen those news stories recently. But I will explain it in a simpler way to help you better understand it. Let's start by understanding who BlackRock is. BlackRock is a traditional asset management company that deals with fixed income assets, risk management, and mutual fund transactions. They manage a massive amount of assets with a value of 10 trillion, making it the world's largest. Recently, through their subsidiary iShares, they submitted an application for Bitcoin spot ETF to the SEC. The approval of a spot ETF is a significant event for Bitcoin market. The CEO of Galaxy Digital believes that BlackRock's insurance of a Bitcoin ETF would be the best thing to happen to Bitcoin, as it would bring many benefits to the market. Well, firstly, if this ETF is approved, it will be traded on traditional financial exchanges like Nasdaq. This means that investors can easily access Bitcoin through their familiar brokerage accounts and tools. Secondly, the approval of spot ETF will enhance the legitimacy and trust of Bitcoin, considering it as a formal asset class and integrating it into the traditional financial system. This will attract more investors to enter the cryptocurrency market, further promoting and development of Bitcoin. For example, let's say FTX exchange is not undergoing bankruptcy liquidation, but it is discovered that they claim to have sold 1.6 billion worth of Bitcoin to customers will actually have only 6 million worth of Bitcoin in their possession. Such news can instill fear and concern many people, leading them to question who is deceiving them. However, if established investment firms like BlackRock appear and support Bitcoin, the endorsement of this well-known brand may attract investors who initially hesitate to enter the crypto market, potential to the concerns about the potential bankruptcy of FTX exchange. They might change their attitude because of this involvement of such a reputable investment institution, further driving the development of the entire Bitcoin market. If BlackRock's ETF is approved, many people would follow in BlackRock's footsteps and invest in it. Additionally, if it is indeed approved, cryptocurrency exchange may feel some concerns. Many investors actually don't care about owning actual Bitcoin or buying Bitcoin through cryptocurrency exchanges. The emergence of an ETF will make purchasing Bitcoin more convenient. However, it is worth noting that while many companies and individuals have applied for Bitcoin ETFs, they have been rejected in the past. For instance, ARK Invest and 21Shares have both applied for Bitcoin spot ETFs, but their applications were rejected by the SEC in 2021 and 2022. They have replied this year, with ARK Invest submitting an application in May and BlackRock in June. However, it is widely believed that BlackRock's application has a better chance. The reason is that almost every time BlackRock applies for an ETF, SEC approves it with nearly 100% success rate in the past. BlackRock has applied for 575 ETFs and has only been rejected once in 2014. The second reason is a relatively technical concept called the regulatory sharing agreement among operators. It might sound a bit confusing, right? Essentially, it is a way for regulatory agencies to share regulatory information with each other. In fact, we already have Bitcoin ETFs in the market. However, the current products are futures-based ETFs rather than spot ETFs. For example, Grayscale offers this type of product. They have been trying to convert the application into a spot ETF, but SEC has rejected their request, claiming that the Bitcoin spot market could potentially be susceptible to market manipulation. The SEC informed Grayscale that their future-based ETF does not currently meet the requirements for a spot ETF because Grayscale has not fulfilled the so-called regulatory sharing agreement. This agreement requires exchanges to share market trading activity and customer identity information to prevent market manipulation. So the SEC rejected the Grayscale's application. As mentioned earlier, BlackRock's application for Bitcoin spot ETF includes surveillance sharing, which increases the likelihood of approval. Moreover, the latest news is that Fidelity is also preparing to apply for a Bitcoin spot ETF, and it will also incorporate surveillance sharing. With so many companies applying, you might wonder the specific process. And how do they really do it? Well, these institutions first announced on their platforms that they intend to apply for spot ETF. After that, they initiate the application process, and then SEC begins its review. Once the review is completed, the application enters the federal system, and a countdown 45 days begins for the SEC to carefully examine with the application to decide whether to approve the establishment of the spot ETF. Within this 45-day period, the SEC must provide one of three possible outcomes, which are approval, rejection, or postponement. They can delay the decision for a maximum of 140 days. By that point, they must make a final decision to either approve it or reject it. Currently, all attempts to apply for spot ETF have been delayed by the SEC or rejected after the 240-day period. According to predictions, the result of BlackRock's application will be announced around August 20th. If SEC delays its decision, it may not be a positive sign. BlackRock's application appears to be well prepared and with no issues. Moreover, considering the size and reputation of BlackRock, if they are unable to secure approval, it may become more difficult for others as well. Another development that you need to pay attention is that Deutsche Bank, with assets totaling 1.4 trillion, has applied for a digital asset custody license from the German government. They aim to provide cryptocurrency custody services. This situation sounds familiar, doesn't it? Traditional financial institutions and companies are still very interested in the cryptocurrency market. This may seem like good news, right? However, some people have raised a potential concern for the future. Bitcoin's most valuable characteristic is its limited total supply. But if Bitcoin starts being packaged into various financial derivatives, when these financial products start trading, many of the Bitcoin components could actually be fake. ETF issuer Fidelity Shares has announced the launch of the first Bitcoin future ETF called BITS, which will begin trading on June 27th. Its price will be based on the daily rolling index of Bitcoin future prices on the Chicago Mercantile Exchange, making it the first leverage ETF. While various speculations and conspiracy theories have emerged in response, which is why launch the ETF at this particular time? Does BlackRock have inside information? Or is it simply their substantial influence that can ensure approval for the spot Bitcoin ETF? Some also speculate that they might have with the risk-reward ratio that even if they're rejected, the potential gains outweighs the losses. Why are other companies rushing to follow BlackRock's ETF application, assuming that BlackRock's spot ETF is approved? Well, no one wants to miss out, obviously. So one by one, they all applied. SEC Chairman Gary Gensler's current attitude of the crypto market is highly unfriendly, and he believes mining tokens fall under the category of securities. Gary has angered too many people, including 2 Republican members of the U.S. House of Representatives who have submitted the SEC Stability Act to restructure the SEC and dismiss Chairman Gary Gensler. Gary is not under huge pressure from various parties, so he might go easy on crypto. In such a scenario, it increases the likelihood of approval of a spot ETF for Bitcoin. With the inclusion of surveillance sharing in the submit documents, and considering that the application is from BlackRock, a company that had only faced 1 previous rejection, there is a possibility that Gary's stance could be softened. Based on these factors, do you believe that the spot ETF application for Bitcoin will be approved? I'm sure you already have an answer in your mind. Alright guys, that's it for today. If you found this video helpful, please slap the like button and subscribe for more. I will see you guys next time.